Morning, market chameleons. How's everyone doing this morning? Dima, you there?
Good morning, Will. Can you see me?
I got you. Looking good. How's everything going this morning, buddy?
Pretty good. How about you?
Great. Great.
Yep.
It's a little cold up here, but other than that, it's great.
Yep.
Reminder, D, we have that webinar tonight with Dan Passarelli at 6. So I'll put the link on the YouTube chat for everyone who wants to register for that. With that, you want to start with the disclaimer?
Yep. Good morning, everyone. And before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer, everyone.
Excellent.
And with that.
Well, with Dan Passarelli showing up this week, earnings season has to be right around the corner, I think.
Yeah, so I'll take a look at what's coming up in the earnings front. I think we're going to start seeing some of them this week. I'm not sure like today, today after the close or tomorrow, but like definitely later this week and next week. But we'll see which stocks are up on deck. Before we get to the earnings, let's just take a look really quickly on the pre-market movers. I think I'll also cover. We have a report that tracks how the out of the money calls, out of the money puts, and straddles perform from week to week. So we'll take a look at that, see what happened last week. Take a look at the earnings calendar, and I think maybe we'll take a look at some bullish bearish plays if we have time. And of course, if you have any questions along the way, well, let me know. I'll try to cover those questions, as many as we can. This is a report, stocks that are trading in a pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Let's filter out stocks with a higher market cap, 20 billion or higher, just to get a sense of what's moving there. And I see here, 12 made the percentage gainers list, 68 on the percentage decliners list. So at least from that perspective, looks like a more bearish opening in the higher market cap stocks. Eli Lilly, right, up 13.7%. Looks like there's some news out there on FDA. I'm just looking at the headline news, something with the FDA, but I'll let you read the news and interpret that. NIO up 10.3%. That's been kind of on a tear. Is that new? I'm going to see if that's a new 52-week high. Yeah, so Eli Lilly, NIO, S&E, Baidu, all, if they open here at 52-week highs. Let me unfilter that. So I know this one's had a wild ride. And what are they, like a competition to Tesla?
Yeah, they're the Chinese EV company. I mean, anyone who's been watching our pre-market show since its inception, there was a lot of talk early on. I mean, it was like a $20 stock. It went all the way down to, I don't know, $1, $2. And now it's
back up to 52-week high. So I'm going to take a look at the 52-week range. So we see here $2.11, high 59.31, it's trading 65.39, up 11% in the pre-market hours. So since I have this one up and I just clicked on it, let's take a look at its gap history. So here, NIO closed 58.92, trading 65.39 in the pre-market hours, up 11%. We see on 14 million shares. So that's pretty active in the pre-market hours, 14 million shares just in pre-market. Again, there are some article, headline news here. I'll let you go and read that. But let's take a look what it tended to do when it gapped up in the morning. So I'm looking at gap up history here. So these are the 12 largest gap moves in the last 3 years. We have the dates here. We have, any press releases on those dates. So you could hover over, kind of take a look at that. These are the gap moves, right? So if we take the average of the 12 largest gap moves, 14% compared to today's 11%. So that's kind of in range with those historical gaps. This is what it tended to do after the open. So from the opening price to the high of the day, the average move was up 6.3%. From the open to the low, the average move was down 5.3%. So favors a little bit more biased to the upside. By the end of the day, it was 50-50. Half the time it was up, half the time it was down. On average, gained 1.5%. So it looks like, when it was up, magnitude of the up moves were exceeded on average the magnitude of the down moves. If we take the absolute average, just how much it moved in either direction from the opening to the closing price, that's 6.2% on average. That's how much movement on average, 6.2% with a high of 24.5. So that's really quickly distribution of returns from the open to the close of the day after the stock had a gap move to the upside from a historical perspective. I'm going to close this really quickly, and nothing else is jumping out at me right now. Just that because it traded 14 million shares pre-market, these are kind of under 100,000. Let me take a look here. I see Twitter plug. They're trading over 1 million shares in the pre-market hours. They're down 7.8%, 6.3%. Let me take a look at the unfiltered report. MESO looks like they had some news on there. 2.2 million shares trading in the pre-market hours, up 59.9%. Again, nothing else jumps out at me. So unless there are any questions in the pre-market, well, I'm just going to move on to the next report.
Sounds good.
Okay. I'm going to take a look here. Here's when in the earnings calendar. This is one of the things that we tag besides when a company, so here you'll see upcoming earnings. So these are earnings expected to be released. So you get like a forward calendar. If you go up, say January 15th, these are 4 stocks that are expected to release earnings on January 15th. You got time of day, conference call. I'm going to come back to today though, just to give you guys other things that we're tagging here. So you could see here that in between earnings, companies sometimes will issue press releases where they're giving you guidance or preliminary. And this kind of gives you some indication what the earnings might be around when they announce. So you see here where it says guidance or preliminary. This isn't the official earnings yet, but they're kind of giving you some information about the upcoming earnings. So here, like LULU, today they reported guidance before the market opens. If you click on this 6:30 a.m., you could read about it and take a look, because if you follow LULU, then the information in here in that press release can be important to your decision making when you're looking at earnings. So see updates, revenue, earnings expectations. I'll let you read about it and see, interpret that. Again, very important. People who follow earnings closely, follow management's expectations, what they're saying even ahead of earnings. And again, this could also impact the magnitude of the move, because if they're giving you much clearer guidance, that move can be much more muted. You're trading straddles. The more uncertainty in coming up in the earnings, the higher chance that it can make a big move. When you're grabbing more certainty heading into earnings, that move can be more muted potentially. So
it is interesting seeing that Lululemon up there, because somehow during this pandemic, Lululemon became a tech company. It was a high-priced clothing, exercise brand, but they purchased it's called the Mirror, but it's basically a workout technology that in a sense competes with Peloton. It's a subscriber-based model,
okay.
Yeah.
That's interesting. I think we're going to start, we're working now with vendors to start organizing some of these guidance and expectations as well. So we'll have like a list of, stocks, and we're going to try to take out some information, standardized like what they're telling us in guidance. But just here, I could see that they're just guiding that they're now expecting to be on the high end of the previous range that they gave, right? So they kind of telecast, this is the range. Now they're saying they're going to be on the higher end, but a lot of analysts, that's what they're basing their also expectations, what the companies are guiding. Let me, unless there are questions on it, I'm going to just move on, but I did want to show people what these preliminary, same thing here, those are prior to, reporting earnings. Let me see if I could see here, let's go to an example one. So this one gave preliminary earnings, say provides preliminary 2020 financial results. So you get a sense of, look, they're giving you the range 2.12 billion to 214 billion on the revenue side, EBITDA. So this is like a lot of information prior to the earnings, just letting people know, because those are things that professionals, analysts are following. So you might want to start, taking a look at that. I'm going to close that up. If there are no questions, I'll just keep moving.
Yep, perfect.
All right. Since we're on, before I go to the earnings, let's take a look. We have this report here on the option side, straddle and wing. So these are looking from Monday to Friday. We track we track the straddle from Monday at 10 a.m. to Friday's close and how that performed. We take an out of the money call from Monday 10 a.m. to the close, and the out of the money put from Monday 10 a.m. to the Friday close, and see week to week how they perform, right? From the beginning of the week to the end of the week. And we look at it from different perspective. If you just bought it, if you bought it and hedged the delta, or if you bought it and re-hedged the delta on a daily basis. So when you're using Black-Scholes model, binomial model, the assumption is that you're hedging your deltas along the way to keep delta neutral. So I'm going to just take a look at the last week. And in the last week, let's just see the best returns here. So we got 3D systems. We talked about that. That's the 3D printers. That stock was up big last week. So you could see here, those are big percentage gainers on the week. Plug, that was up big last week. You could see how that out of the money call performed. SSYS, also 3D printer, that was up big last week. So if you just want to see it, you hit this view. And this is a history, but the last week you see January 8th expiration. So if you did this call, January 4th, 10 a.m., stock price was $10.62. If we did that out of the money call and the strike 11.5, all right, January 18th expiration, 11.5 strike call was 23 cents. So your call premium was 2.1% of stock price. January 8th expiration, the stock was up to 23.61, up 122%. That call was worth $12.11 at expiration. So you could see from 23 cents to $12.11, huge percentage gain. All right. So that's how you would read that. And this is the history of it. So if you wanted to see on average, what did the best on average in the last 12 weeks? And let me just make sure there's at least 12 observations. So we can take a look that way. So this is on average, these are the best returns. And if we want to see what was the most consistent, these are the ones that had the most consistent profitability. CFSQs here. And these were the different types of strategies. So really quickly, just wanted to kind of reference that. Maybe I'll go over more as we go along, on Mondays, if people like this report. Just wanted to show you really quickly, if you're looking at that, what was going on in the options, best performers during the week. Let's take a look on upcoming earnings. So here we're going to take a look at earnings that are expected to be reported in the next 2 weeks. I'm going to use this filter here, looking for stocks that on average trade 5,000 contracts or more per day. So average daily option contracts, 5,000 or more. Let's take a look at the full report. So it looks like in this case, January 14th, using that filter, 5,000 or more. We got a few January 14th, 15th. So it's a little bit later in the week. I see, JP Morgan, Citigroup, these are the banks.
Well, the bank stocks, typically CNBC will start talking about the start of earnings season, the day the bank stocks.
Right. So when we get closer, I think we'll start looking at the straddles because they might be, they're going to be changing during the week. So I'm going to take a look at the straddles as we get closer, but let's just take a look at, I know these bank stocks have popped recently, right? JP Morgan, Citigroup, Wells Fargo. So I have this one queued up. So I'm going to just see the JP Morgan from a different perspective to see like where we think from a historical perspective where the implied value is. So I'm coming here, fundamentals, and this is, by the way, I'm still testing this. You guys are not going to see this. Still looking, testing, working out bugs in the data and exceptions, but let's take a look where we think the implied value of JP Morgan is if it reverted to historical means. So here we see JP Morgan historic 3-year average PE is 13.2. So if it reverted to its historical mean or average PE, then this stock would be at $100.82. If we look at price to sales, so historically, if we took the JP Morgan's market cap divided by its total revenue, traded at 3.4 multiple. If it reverted back to that mean, it's $120.54. Let's take a look at JP Morgan relative to the S&P 500. So we see here that historically, JP Morgan's PE is 17.8 compared to the same period, SPY PE 34.9. So on average, it traded 49% discount to the SPY PE. Right now, we're at 13.2 versus, sorry, this is where we are right now. Historically, the average is 13.2 versus SPY 25.6. So it traded, that's where it was historically, around 49% discount to SPY. So if it reverts to that, 137.52. Price to sales. So right now, JP Morgan price to sales 13.6 multiple versus SPY 2.8. So historically, that it traded a 29% premium to SPY. Today, we were 3.4 multiple. Sorry, this is today's 29%. Historically, traded on average 3.4 multiple to SPY's 2.4. So the historical multiple 39% premium to SPY. If it reverts to that, it'll be 147. So if we took the average of all these multiples, it's about $128.52 versus today's $134.50. And it's pretty much in range, within that range. So at least those stocks, bank stocks, look from JP Morgan, they're in range. Let's see what other ones coming up. Citigroup.
Yeah.
Doing the same thing. Citigroup, $62.80. So we can see here that's in range. What was the other one? Wells Fargo.
WFC, correct.
27.65. So kind of in range a little bit.
I mean, you could look at Goldman Sachs as well as coming out.
Let's take a look at Goldman. Again, this is just looking from if it reverts to the historical mean. We're just looking at the multiples. So 289.65. Again, kind of in range. Some of them are a little bit lower. Some of them are closer to that average, but nothing crazy right now. What else we could do heading into earnings? Let's just take a look at the post-earnings drift. So here, Goldman Sachs, we see after they reported earnings, looking from the day after that till now, we take a look at the drift, how much more, what kind of expectations are being built up coming into the earnings. So here we see Goldman Sachs is up 38% post-earnings drift. Okay, so that's not including the earnings day, right? Price effect, that's after reporting earnings.
Well, in the chat, it's been mentioned because Goat was mentioned that he had read an article this weekend or on one of his chat rooms was talking about be careful for a slowdown in this market or a cool off. And Jake was like, everything has been straight up since November. And that obviously up 38% is a reflection. I mean, these bank stocks have been straight up the last 3 months.
Yeah, but we could see at least they're not that far away from their historical means. If we just look at the multiples, but yeah, look, it's up 38%. That compares on average, it drifts, it's almost break even, most of the time it's like right, in line, and the average move up or down between drifts is 8.3%. Between earnings, 8.3%. So that's a massive move between earnings, 38.1. The high to, right now the to the highest point, it's 40.8. So we're like sitting next to that. From the low to the low, it's 12.2%. So, and we could see here, these are the averages historically. So massive, that's a massive move. I don't know if they all did that. Let me take a look.
Well, the thing was and that's when people talk about moving into value stocks, I'm assuming that's what they mean, is stocks that were away from the historical mean relative.
Caught up.
Yeah, have caught up.
They may have caught up. Maybe they're well below their mean that they just like with the rest of them, they finally just caught up. Because at least from the historical mean, they don't look far away from me, but these are pretty massive, from a historical perspective. You could see.
Yeah, no, that was the value right there.
Yeah.
That's what made them the value stock.
Right. Let's take a look. Yeah, they just caught up. This one's up 51%. So we'll look at what the straddles are implying as we get closer to the earnings, because they're going to be changing, as we get closer. I think they're going to become more and more active, a couple days leading up to it, especially the day leading up to it. Earnings, that's when they're most active. So we'll see how they're pricing that straddle day before earnings. But yeah, those are pretty massive moves. And it looks like all they did was kind of just catch up to their, let me see, did we look at Citigroup? So Citigroup 62.80, right? So it's like a little bit above that average. All right, let's take a look at, do you have any questions before?
We've one, Kumar has asked twice, and I'm not exactly sure. He's asking about implied volatility, list more than 1 billion market cap, please. So I'm not exactly sure what screener he's looking for. He does, because we don't have, they're obviously in the pre-market, we don't have a pre-market implied volatility list. We have an implied volatility rankings. So that's what I would look at.
This one, right. So, right. And I think a lot of people, they think, well, if stocks are trading pre-market, so are options, but it doesn't work that way. So you're JP Morgan, Facebook, Citi, those aren't, the options are not trading pre-market. They start trading after 9:30. And, these exchanges are different. The stock exchange is a different exchange from the options exchange, right? They're actually different exchanges where options are trading, different exchanges where the stocks are trading. So you actually have more options exchanges at this point that trade options than you do stock exchanges, I believe. But yeah, and there are certain exchanges that only trade options and they don't even have, a stock exchange at all. But let's take a look at the options implied vol movers. Maybe this was he was looking at, and really quickly, this is the symbol, the name of the stock, the price of the stock, would it change that? So I'm gonna look for stocks with like at least $10 or higher. So again, symbol, name of the stock. This is the stock price, what it did on Friday. Market's not open yet. This is the expiration that we're looking at. So we have all these different expirations we're looking at the money straddles. So Jan 15th expiration, 6 days to go. The at the money vol is 289. This is what the implied volatility did on the at the money's Friday. This is the amount of contracts that traded on January 15th. This is the straddle, what the straddle is implying, the move. So if you're buying a call, buying a put, right, in either direction has to move up or down, it's implying 32.2%. That compares historically, this stock over a 6-day period moves on average 17%. So you could see 32% implied, historical average 17%. So if we take that ratio, 32 implied divided by historical average, we get 1.9. The high move on that stock, 218% over a 6-day period historically. So let's take a look at the next expiration. When is that? February 16th?
Yep.
Or 19th? Next monthly, I think the 19th. Okay. Yeah, so February 19th, he wanted, what was the market cap he was looking at? Under $1 billion?
Yeah.
So we could use this filter under 1 billion, and then we could kind of sort, by this ratio, or let's look at the ratio below 1. So below 1, you can see here, it actually just gave me 2 ETFs, but we see that on February 19th, 29 days to go, the straddle's implying a volatility of 25%. Historically, on average, this moved 30% in either direction. So that's, if we take that ratio, it's 0.8. Here, it's slightly below 1, 13.6 divided by 13.9, slightly below 1. These are above 1. So we take a look at, let's say, here's, if we do the biggest, remember, these are only looking for under 1 billion market cap. Okay, so REV, 29 days to go, Feb 19th expiration, straddle's implying a move of 30%. Historical average is 12.1%, so that's 2.5 times its historical average. Now you want to take a look because there's probably a reason it's very pumped up. There could be news out there. I mean, I see it moved 7.4% just Friday alone. You want to take a look at any kind of upcoming events. You do want to do your research and see why is it so much higher than the historical average before you do anything.
He was actually looking over $1 billion. That was my fault.
Oh, over $1 billion?
Yeah.
Sorry. All right, so let's go over $1 billion. So now over $1 billion, again, we'll do below 1. So here we get a bunch more, like Beyond Meat, the straddle February 19th. Remember, I just have this straddle, this expiration selected, 29 trading days to go. That the straddle's implying move 14.8. Historically, the stock on average moved 39.7, 29-day period, using 6 years of data. So we take that ratio, 0.4, EGO, February 19th expiration, straddle's implying 15.5% move compared to historical average 35%. That ratio is 0.4. Roku, I'm just trying to go to the higher market cap at this point. Roku, 18.1% implied move versus historical average 25.5. That's a 0.7 per ratio. A high move on that, 68.9. Netflix, straddles implying 11.6% move compared to historical average 15.1%. That's 0.8%. So you could even filter, just by market cap like this, historical market cap, and see those ratios. Again, that's a quick reference, what the straddle's implying versus what the historical average move was in the stock.
Very cool. Very cool. Well. Yep. Just a reminder, we have a webinar tonight. I put the link on the chat. You can join us on YouTube Live. That's 6 p.m. tonight with Dan Passarelli. D, thanks. Great job. Actually, remind me, they were asking about the skew in SPY and Twitter today. What was going on with the downside puts? Maybe we'll look at that tomorrow.
Okay, yeah, we'll take a look at that one tomorrow then.
All right, great job. Thanks for doing it, G. Awesome
Thanks,
job,
everyone.
Chameleons. Have a great